So, good morning. This is the first of a series of podcasts that we're going to be doing that are while we're sheltered in place and have lots of questions about real estate. We obviously have access to some amazing market experts who are also sheltered in place and working from home and have a little more time than they might typically have. So, we're going to kick this series off with my friend and partner in real estate, Christina.Johnson, with Caliber Lending. And Christian is amazing in his field and does all types of lending. And we're privileged to have him here today, and he's going to answer a few questions for us. Good morning, Christian.
Good morning. Thanks, Matt and Ted. I appreciate it. Love being on, and certainly happy to help and shed any light that we can during the pandemic podcast series.
Well, we know that there's no great answers at this moment. It's changing daily.
Yeah.
And you're going to tell us a little bit about that. Beautiful backdrop you've got there.
Thank you. It's, we've recently renovated our home, and it's good to be home. And I'm certainly thankful that we were able to move back in before this all hit and we were stuck in place. So
good. Well, we're glad to hear you and your family are doing great.
Thank you.
So, Christian, we've been getting some questions from buyers and sellers alike, and we just wanted to sort of hear it from somebody who's as much in the know as they can be right now. So, one of the first things that we're getting, and pardon me, I'm going to look at my notes so I get this correct.
Okay.
One of the first things is from our people who were sort of looking at buying or refinancing, what's the first thing that they need to know in this current, where we are today?
Yeah, the first thing is to be in constant contact with your realtor and your mortgage lender, and hopefully your realtor and mortgage lender are in contact as well. What's happening right now is mortgages are a bit of a moving target, to be honest with you. And, it's almost daily that there's some industry change coming down the line. It's almost daily that, a product's either going away for a little bit and then it's coming back for a little bit. Liquidity is a big issue in the market. And, the biggest concern on the mortgage side is certainly this forbearance stuff that we're seeing. A homeowner who owns a home, the ability to forbearance their payments, and what that is basically stop payments for 3 months. What they're not realizing is that at the end of the 3 months, they've got to pay all those payments back.
Wow.
It's a huge hit.
I don't understand that. Can you say that again?
Yeah. So the forbearance program, the way it's presented, basically states that you can stop making your payments and it won't report on your credit report for 3 months. But at the end of those 3 months, you have to make all those payments.
So it's almost like a balloon payment.
It's almost like a balloon payment, exactly, at the end. And, as far as mortgage companies, it's how do we report that? How do we reinvent the wheel on that? And how, are we really doing a service or a disservice to our clients by putting them in the financial strain at the end to collect all three of those payments? That's tough. Then the next consideration there is what's called first payment default.
Okay.
And let's say one of our buyers goes out and buys a home and we get them into their lovely new home. And then 2 weeks later, they get notice saying they're being furloughed or something happens to their position with their company. Well, then they call in and do forbearance or do some sort of workout. When you miss your first payment, that becomes an unsaleable loan on the mortgage company side. It's first payment default.
Wow.
And it's a big deal. So when that happens, we got to make sure, one, we have enough money to ride the storm. The other part is, what do we do with these unsaleable loans? These loans that we can no longer send to Fannie Mae or Freddie Mac because we signed an agreement with them that if we did a loan that missed its first payment, we have to keep it, kind of thing. So that becomes scary. And then the other part of the forbearance, I should have not skipped that, is that, yes, the client can stop making payments for 3 months, but the servicer, who then has to pay Fannie Mae, still has to make those payments. So we have to have enough money in the bank to pay Fannie Mae and Freddie Mac what we owe them for those 3 months, even though we're not getting paid.
You're saying that, how tight the market got because all of a sudden you have lenders having to cover this forbearance, correct?
Right. And so it put everybody in kind of financial strain because we didn't know, what are we responsible for when we're not getting the payments from the customers? Or, in the government loan sector, a lot of times there may be some hickeys or blemishes on the transaction that caused it to go into maybe a FHA loan. And we certainly don't want to put anybody in a bad position by putting them into an FHA loan that they can't make that first payment or second payment in later on. So there's a lot of uncertainty. A lot of that we're having to pivot on the fly and figure out, what next. And, the federal government in doing everything they can to help, they threw a ton of money in for a little while and they kind of washed out the market. And then we had to ask them to, hey, slow down a little bit. We haven't quite caught up. And so they slowed down buying mortgage-backed securities. So that helped us out. This is all new stuff. And we're dealing with an unprecedented event that we've never had to deal with before.
Okay.
So we're learning on the fly, and we're making changes to the situation. We have a new document that we started to send out to our clients. It's the COVID-19 document that basically says that throughout this transaction, you're going to let us know if you've been furloughed or you've had a change in your position. And we're even having to verify employment the day of closing just to make sure that their position has not changed up to that point. We don't know because a lot of times people are getting caught on their heels. They don't know it's coming either.
Makes my
So it's a lot to navigate right now, and it adds extra layers to every transaction. But we certainly don't want to put anybody in a bad position. We don't want to put anybody in a position that they can't make their payments. And then we have to protect for the financial institution itself too.